Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, and I'm with Greg Willett, the Vice President for Research and Analysis at MPF Research. And today we're talking about the three major markets in Tennessee: Nashville, Memphis, and Knoxville. Let's kick it off with Memphis. This is a metro that continued to lose some jobs in 2010 and just hasn't seen the spike in apartment demand seen in most other parts of the country. And as a result, Memphis posts the nation's very worst occupancy rate among major markets, just 88.6%, up just 0.3 points annually. But despite this horrible occupancy rate, same-store rents in Memphis jumped 3.5% in 2010, topping the U.S. norm of 2.3%. Well, why is that? Well, that leads us to the big story in Memphis, and that is that overall market fundamentals are pretty horrible all across the metro, except in the two key upper-tier areas of downtown Memphis and the eastern suburban area of Cordova, Germantown, Collierville. No matter how you cut the data, these two stand way above the pack for both rent change and occupancy. Take a look at this chart here, where you see rent growth of 9.7% in downtown Memphis and 6.7% in Cordova, Germantown, Collierville, which are already easily the priciest submarkets in Memphis, and occupancy rates above 93% in both places. Meanwhile, in every other submarket, terrible occupancy rates in the 80s and only minimal rent growth at best. And we're still seeing rent cuts year over year in South Memphis and Southeast Memphis. And Greg, I know you got a better story for us in Nashville.
Well, you know, if you're starting from the bottom across the U.S., it's obviously going to be a better story. But this is really a lot better story because we're going to go from the bottom to almost the very top in the U.S. perspective. Some really stellar results for Nashville over the course of calendar 2010. We'll go again to a chart here, and you'll see that the occupancy number for you currently at 94%. In Nashville overall, that is up a solid 3.1 percentage points over the past year. Effective rent growth strong as well, 5.1%. Put those two changes together. Revenue growth of 8.2%. That's actually the third best performance seen across the nation in calendar 2010, behind the growth of around 10% in the ultimate odd couple of El Paso and New York City. And so what we see in Nashville that really separates it from the pack compared to a lot of markets across the country, really solid performances in every single neighborhood, every single product niche, just really strong overall numbers. And certainly over the past year, helping those numbers a little bit, some flooding back in the spring damaged some of Nashville's total housing stock. But otherwise, I mean, this one was already poised to do well. So again, a great story in Nashville for calendar 2010. So how does that compare to what we see in Knoxville?
Whereas Nashville is the star performer and Memphis is the clear underperformer, Knoxville is the erratic one. Smaller markets like Knoxville tend to be volatile, and they tend to see occupancy and rents move a little more than the major markets do, and that's the case here. Take a look at this occupancy chart showing occupancy over the past 3 years. You see Knoxville fell pretty hard in 2009, as did most of the country, and in 2010, it was looking like a pretty good year until 4Q came along. Occupancy fell from 95.1% to 93.1%. Not a bad rate at all overall, but the extreme shifts apparently left operators and owners unsure what to do on rental rates. So in the end, year over year, rents didn't change very much at all. Same-store rental rates actually inched down a slight 0.3% year over year. Now, Greg, let's take a step back and look at the outlook for these three markets going forward. Is there anything to suggest that these two markets of Knoxville and Memphis could knock Nashville off its perch as the top performer of Tennessee?
Well, the easy answer for that one is no. And what we would really anticipate moving ahead is kind of more of the same. And from 30,000 feet, Memphis is probably going to continue to look pretty ugly compared to most markets across the country. But again, dig down deeper into the data. There are some niche opportunities here that might make that one worthwhile. Going over to Knoxville, certainly better than Memphis overall, but again, tending to be volatile from one quarter to another. So that leaves Nashville as the clear winner in this group. I don't know that we're going to see 8% revenue growth sustained moving ahead, and it would just really be hard to do that given that part of that came from a big occupancy bump in the past year or so, and you just don't have room for that to keep happening. And the rent growth about 5% on an annual basis right now. That's about as aggressive as operators have ever gotten historically. So some good numbers, but not quite at that 8% level. And I do think, an interesting thing to watch in Nashville is that we're getting ready to crank up another round of construction, and developers are scrambling to get going here. And we might see some interesting product evolution in this one. When you go out, particularly to the suburbs in Nashville, the top tier product compared to some other places across the Southeast, particularly Raleigh and Charlotte, which I would think of as pretty comparable markets, you have more bells and whistles in the apartments in these other spots. And I think that we might in this cycle see some meaningful upgrades in the overall quality of what gets built in Nashville.
So there you have it. There's the outlook for the volunteer state. Until next time, for Apartment Market Dynamics and Greg Willett, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.